from the investment center, higher risk, higher reward. But for me, the answer is really simple, because that's the end of the business that I enjoy. I enjoy making the discovery. I enjoy getting up every morning and seeing what came out of the drill last night, seeing if there's something new and different there. So it's very much a personal answer. From the investment point of view, high risk, high reward. And I think you touched on a little bit earlier, we're inherently gamblers in the space.
And I think as well that, gold price does reflect inflation, and, inflation is impossible to measure because the stats don't really seem to mean anything. But, you go back, as you said, when gold was 250s, fuel price was dirt cheap. Well, fuel's $80 a barrel now, so it's 10 times the price. Yep. Gold isn't 10 times the price. So that squeezed the margin. So, and it's not just that, it's when you buy trucks or sag mills or steel or concrete or, all of those things. So that's what's really hurt the industry, is you've seen the underlying cost. Labor is another major component that's really gone up a lot. It's backing off a little now, but it's all those costs are squeezed up. And yeah, gold was going up and going up a little bit faster, but now it's down. That margin is pretty much evaporated. And I wouldn't characterize it. I mean, there's definitely bad practices in the industry, and there've been some poorly spent capital, but a lot of it is uncontrollables. The cost of steel or mining trucks or whatever it happens to be, or fuel, you have no influence on it, and you have to deal with it.
Finding your deposits provides options for growth and creates value. And you don't always have to develop those discoveries, you can sell them and make money as well. I think the 10 years I managed Anglo's exploration, we sold a range of deposits that didn't fit their investment criteria and returned over $2 billion to the corporate centre. And we delivered about $5 billion worth of projects to the business units. Now, that's not usual for majors, but it does show you can make money by selling, it just as well by developing. And accumulating the best treasure hunters, wherever they reside, whichever companies they're in, and the best deposits, you will always, because they've got quality, you always make money. It's just a timing issue in terms of where the markets are. But quality economic deposits are very rare, and they're the sort of things, and they're the sort of people who find them that you want to look out for.
They are interested from the standpoint, even though it's producing 100, 150,000 ounces a year, which 3 or 4 years ago would never have got on the radar screen. They're looking for these high margin opportunities now, and that's coming all the way down market to groups that are like Anglo Gold or Newmont or even Barrick. Now it's all about margin. And ounces, these companies are going to produce a lot less ounces in the future, but they need to produce ounces that are going to have margin. And that's what's important for them now.
But at the end of the day, one of, I think, the biggest mistakes of our industry over the last decade is that they've tried to grow for the sake of ounces. So if those ounces were expensive, it didn't matter. We were going to grow those ounces. Production was going to go up. We can promise shareholders we're going to deliver, 20% more next year or 10% more. And that has killed the reputation of our industry. It's made us look like an industry that doesn't understand margin or value. So I think part of the problem is going to be the solution in the future. Mindset has actually changed, and hopefully that'll trickle right down to the junior companies who are not going to go for those, big, low-grade, tiny, really in the middle of nowhere projects. You really have to think about infrastructure, what that grade is, and really at the end of the day, what makes a project is grade. That's going to ride you through the cycles. So think of projects with real grade and real margin.